Well, let's take a look at the Q1FY24 report card of the banking sector. Sectoral quarterly profit after tax was the highest ever, coming in at 74,677 crore, up about 69% YOY and more than 18.5% quarter-on-quarter. Profit growth was strong quarter-on-quarter for banks like Axis Bank, Yes Bank, Suryodaya Small Finance Bank, Union Bank, Bank of India, Canara Bank, PNB, RBL Bank, etc. While a decline in sequential profit was seen for Punjab and Sindh Bank, Central Bank, CSB Bank and Bank of Baroda. Net interest margin has come under pressure for most of the banks in Q1 FY24 and this may continue in Q2 FY24 as well. While a few banks have been able to withstand the decline in net interest margin like HDFC Bank, Canara Bank, Union Bank of India, others have seen a decline on a sequential basis in NIMs anywhere between 8 basis point to 62 basis point. Operating profit growth for the PSU banks was better than that of private banks. So, operating profits for the sector increased by 43.7% YOY and about 0.1% sequentially. PSU banks operating profit growth was 55.5% YOY and about 0.4% sequentially, while that of private banks was about 32% YOY and a decline of 0.2% quarter-on-quarter. Large part of PSU banks operating profits were due to the treasury gains, which is seasonal in nature. Bandhan Bank is the only bank to witness decline in operating profits both YOY and quarter-on-quarter. Over the last 4 quarters in a row, PSU banks have been increasing their share of operating profits in the banking sector. Their operational performance has been better than that of private banks on account of improvement in net interest margin, operating efficiency and in Q1 FY24, better treasury gains. Asset quality. Now, banking sector continued to see improvement in asset quality despite seasonal hiccup in slippages. Slippages of the sector stood at 52,166 crore, which is up 10.5% quarter-on-quarter. PSU banks slippages were up 10.1% quarter-on-quarter and while that of private banks were up 11% quarter-on-quarter. Annualized slippage ratio for the sector stood at 1.47% when compared to 1.36% in the previous quarter. Now, annualized slippage ratio for PSU banks was at 1.29%, up about 10 basis point quarter-on-quarter. For private banks, it was at 1.77% when compared to 1.63% in the previous quarter. Now, asset quality for the banking sector is perhaps one of the best in last 10-15 years. Gross NPA ratio of the sector declined to 3.8% when compared to 5.9% in the same quarter last year and about 4% in the previous quarter. Net NPA ratio of the sector declined to just 0.9% when compared to 1.6% in the same quarter last year and about 0.96% in the previous quarter. Core provision coverage ratio continued to improve. It now stands at 76.5% when compared to 73.2% YOY and about 76.2% quarter-on-quarter. Lowest net NPA ratio in the banking sector is of Ujjivan Small Finance Bank, while notably Bank of Maharashtra's strong momentum on asset quality continued. Net NPA ratio remained above 1.5% for the likes of Central Bank of India, Union Bank of India, Bank of India, PNB, etc. In terms of outlook, now deposit growth will continue to come in at a cost for the banking sector in Q2 FY24 like it did in Q1 FY24. This could put pressure on the cost of funds. Small finance banks are witnessing strong momentum with respect to their earnings, which can continue in Q2 as well. Treasury gains will not be there in Q2 FY24 for many banks. Now, banks won't mind shaving off a couple of basis points from their ROA, that is return on asset, if credit profile of the balance sheet is healthy. Return ratios hence can remain on the healthier side for the banking sector.